Welcome to the Deep Dive. We're here to plunge into complex topics, unearth the key insights, and really arm you with the knowledge that matters.
That's right.
Today, we are zeroing in on a really major player in the digital currency world, Circle.
The issuer of USDC.
Exactly. They just had their first public earnings report, which is a big moment. And it makes you wonder, what does this really tell us about where money itself might be heading?
It's a fascinating question. They're not just, a crypto company. They're building infrastructure.
Right. So our mission today is to unpack Circle's Q2 financials, look at their new products and strategies. They've got some ambitious stuff, and explore how new regulations might be changing the game.
Definitely. I want to cut through the noise, give you a clear picture.
Yeah, and all of this comes straight from the source. Circle's Q2 2025 earnings call, their presentations, plus some recent CEO interviews. So it's a direct look at their performance and their vision.
And it's insightful how they even define themselves. They say they're an internet platform and network utility company.
Which sounds quite different from a typical crypto firm.
It does. And they operate, quote, the largest regulated stablecoin network in the world. They're talking about reaching over 600 million people who can actually use USDC.
Wow, 600 million. That's a huge number, especially for tech that still feels pretty new in some ways.
It really is.
So for listeners maybe still getting their heads around this, how do we simply explain what digital dollars like USDC really are?
Okay, think of it like this. You take your regular money, say US dollars, and Circle transforms it into a digital version, USDC.
Okay.
This digital dollar then lives on the internet. It can move instantly, globally, 2047 for payments, transfers, investments across like tens of thousands of different apps and services.
So it bypasses the old banking rails.
Exactly. It makes money programmable, fast, and accessible in a way traditional systems just aren't.
Got it. So if they're managing all these digital dollars, how does Circle actually make money, especially now they're public? What are the engines?
Well, their main source is what they call reserve income. It's pretty neat, actually.
How does that work?
So every single USDC is backed one-to-one by real assets, mostly U.S. treasuries, very safe stuff, and other short-term yield-bearing things.
Oh.
Circle earns income, yield from holding those reserves. It's a bit like how a bank earns interest.
Makes sense. But you mentioned other streams.
Yeah, and this is key. They're pushing hard on other revenues, things like new services, subscriptions, transaction fees.
And those are growing.
Growing fast. And they specifically highlighted these have a higher margin profile, so more profitable for them, which investors obviously like to see.
Right, that diversification seems important. And it looks like it's showing up in the Q2 numbers.
Absolutely.
Total revenue and that reserve income jumped 53% year on year, hit $658 million. That's up from, what, $430 million a year ago? Pretty significant leap.
It really is. And look at USDC itself, the amount in circulation.
Yeah, that surged 90% year on year to $61.3 billion by the end of June. And they said it accelerated even more, hitting $65.2 billion by August 10th.
Which means nearly 50% growth just since the start of this year. Incredible momentum.
But it's not just sitting there, right? You mentioned utility.
Exactly. This is maybe even more impressive. The actual on-chain transaction volume, the amount moving around it, soared 5.4 times compared to last year.
5.4 times.
Yeah, reached nearly $6 trillion in Q2 alone. And then another $2.4 trillion just in July. That's what they mean by high velocity. People aren't just holding it, they're using it constantly.
Okay, that's a really strong picture.
Right.
Now, we do need to address one number that might catch someone's eye. That reported net loss of $482 million in Q2.
Right, and you absolutely need context for that figure.
It's not the whole story.
Not at all. Circle was clear that a big chunk of that was due to one-time charges related to its debut on the NYSE, costs tied directly to going public.
APO expenses. Okay.
Yeah. So a better indicator of their actual operating health is probably their adjusted EBITDA.
How did that look?
Pretty strong. It was $126 million in Q2, up 52% from last year. And they had a 50% adjusted EBITDA margin. That signals strong operating leverage.
Meaning their core business is getting more profitable as it grows.
Basically, yes. It's becoming more efficient at scale.
And those other revenues you talked about earlier?
They're making a difference. Grew 250% year on year to $24 million. Small base, but huge growth. And they said it added 2.2 percentage points to margin overall.
Okay. They also mentioned a term RLDC margin. What's that about?
Right, RLDC. Stands for Revenue Less Distribution Costs Margin. It was 38% in Q2.
And distribution costs are?
Think of partners like Coinbase who help get USDC out there and drive adoption. Circle gives them incentives. RLDC is the margin after paying those partners.
Wow, okay, so it shows what Circle actually keeps after sharing with key distributors. Gives a clearer profitability picture for their core operation.
Precisely. It reflects their partner-driven strategy.
Got it. So the financials paint a picture of strong growth and increasing operational leverage despite that IPO-related loss. What really seems exciting is what they're building next.
Yeah, they're definitely not resting on their laurels. The product pipeline is ambitious.
What's the headline act there? What really stood out?
For me, it has to be ARC. They're calling it the home for stablecoin finance.
ARC. Okay, what is it?
It's a completely new Layer 1 blockchain network built from the ground up, specifically designed for institutional-grade stablecoin finance. It's launching later this year.
A whole new blockchain. Why? Don't we have enough already?
Fair question. But their angle is different. They're not just building for crypto folks. They're building this arguably for Wall Street, for big financial players.
Okay, bold claim. What makes ARC so special for those institutions?
It's designed to solve their specific pain points. First off, transaction fees, gas fees are paid directly in USDC.
Oh, not some other random token.
Exactly. That removes a huge layer of complexity and volatility. You get low, predictable, dollar-denominated fees. Enterprises love predictability.
Makes sense. What else?
Second, deterministic settlement finality.
Sounds technical. Why is that important?
It's crucial. It means when a transaction happens on ARC, it's settled instantly, permanently. No chance of it being reversed later. For financial institutions and regulators, that kind of certainty is non-negotiable. It delivers enterprise-grade performance.
Okay, certainty is key. What about things like privacy? Institutions often do that.
Addressed too. ARC will have configurable privacy controls, things like opt-in confidential transfer features. So businesses can meet regulatory needs and, keep sensitive commercial transactions private when necessary. It's not all public.
Configurable privacy, got it. And you mentioned something about FX.
Yeah, a built-in FX engine. Think of it as a 247 foreign exchange market built right into the blockchain. It allows institutions to get real-time price quotes for currency pairs and settle those trades instantly, peer-to-peer, on the chain. It could fundamentally change how global currency exchange works.
So ARC sounds like it could be foundational infrastructure. How does it connect to their other initiatives like the Circle Payments Network, CPN?
Great question. They're tightly linked. CPN is Circle's on-chain native payments network. It's designed to move money faster, cheaper, more efficiently, globally. Think programmable payments.
And that's already live.
Yep, launched in May. They already have 4 active payment corridors connecting places like Hong Kong, Brazil, Nigeria, Mexico. And they said over 100 financial institutions are in the pipeline to join.
So CPN uses ARC.
It's expected to leverage ARC heavily, especially for the payments, the FX stuff, capital markets applications. CPN will benefit directly from ARC's features like privacy and that USDC fee model. The vision is huge. B2B payments, consumer use cases, treasury services.
Okay, so ARC is the rails, CPN is the train carrying the value. What about USYC, another token?
USYC is different. It's a yield token. Basically, it represents ownership in assets that generate yield, but you can use it as collateral.
Collateral for what?
For trading, for instance. And it offers 247 liquidity back into USDC. The big news here is their expanded partnership with Binance.
The world's largest exchange.
Exactly. Binance is making USYC available as collateral on their platform. That's a massive step for what they call the institutionalization of digital assets.
So institutions can earn yield on their collateral while still having it ready for trading.
Precisely. It optimizes capital efficiency. Their vision is for this kind of new 247, 365 market structure, maybe even integrated with traditional players like ICE down the line.
Interesting. Okay, one more piece. Circle Gateway, what does that do?
Gateway is all about user experience. It sort of abstracts away the complexity of USDC being on different blockchains.
Because USDC exists on multiple chains, right?
Yeah, lots of them. Holding it in different wallets, managing different chains, it can be confusing. Gateway gives you a unified balance. You just see your total USDC.
So it makes it easier to send and spend regardless of the underlying chain.
Exactly. Instant transfers across chains, they say, in under half a second. It's different from their CCTP protocol, which is more the underlying tech for moving value between chains. Gateway is the smooth front-end experience.
Makes sense. And all these products are underpinned by partnerships, right? They mentioned quite a few.
Oh, yeah. Major cross-border players like Remitly, MoneyGram, ZEPZ, payments giants like Stripe, Visa, MasterCard,
Wow.
plus core banking infrastructure providers, Matera, Fiserv, FIS, Corpay. These guys serve like tens of thousands of banks and financial institutions globally.
So legacy finance is really plugging into this.
Absolutely. It shows USDC is becoming trusted plumbing for the future of money movement. It's moving mainstream.
And speaking of trust and mainstream, that brings us neatly to regulation. The Genius Act sounds like a really big deal.
It's potentially transformative. Signed into law July 18th, 2025. It provides that long-awaited regulatory clarity for payment stablecoins in the U.S.
What are the key takeaways from it?
Okay, number one. It confirms payment stablecoins like USDC are not a security. That removes massive legal uncertainty that's been hanging over this space.
Huge. What?
Also crucial, it states that the reserves backing the stablecoins are bankruptcy remote. Meaning, even if the issuer, like Circle, somehow failed, the customer assets backing the stablecoins are legally separate and protected. You should still be able to redeem your USDC one for dollars. That's massive for confidence.
Okay, so not securities and reserves are protected. Any other rules?
Yep, strict rules. Strict 1.1 reserve requirements limited to cash, short-duration treasuries, and treasury repos. So only very safe, liquid assets.
No risky stuff backing it.
Right. Plus, robust transparency requirements and mandatory compliance with all the financial crime rules. AML, BSA, Anti-Money Laundering, Bank Secrecy Act. Standard stuff for regulated finance.
So this basically sets up a clear, regulated framework for stablecoins like USDC.
Exactly. And Circle sees this as a major accelerator. They believe it will speed up adoption by, major financial institutions, mainstream enterprises, technology companies, across all sorts of uses, retail, wholesale, capital markets.
Have they seen evidence of that yet?
According to the CEO, yes. He mentioned an incredible amount of inbound interest from big institutions globally, both after the IPO and especially after the Genius Act passed.
So it's like a green light.
That's the phrase they used. A green light go view for stablecoins. Now that the regulatory fog is lifting, it removes a major barrier for traditional players.
Okay, so strong product pipeline, now strong regulatory tailwinds. What's the general outlook for the stablecoin market itself? How fast could this grow?
Well, analyst projections vary quite a bit. Some see multi-year growth rates, CROGs, from 25% up to like 90%. The median seems to be around 60%.
That's pretty aggressive growth. What's Circle's own view?
They're actually taking a more conservative stance in their modeling. They anticipate a multi-year through-cycle USDC growth of a 40% CAGR, still very strong, but maybe more grounded.
40% is still massive growth year after year. Now, there's been this debate, right, that stablecoin reserves holding all those treasuries might crowd out bank lending. How does Circle respond to that critique?
Yeah, they push back on that pretty firmly. The CEO called it a mistaken view.
Okay, what's their argument?
He argues that this super high velocity, very high utility money, as he calls stablecoins, won't hinder credit. Instead, he thinks it will actually lead to very robust credit markets develop that are operating on blockchain networks.
Interesting. How so?
The idea is that faster, more transparent, more efficient money movement on blockchains could actually create a safer financial system with more effective credit delivery. So rather than crowding out, it provides a better foundation for credit.
That's a really interesting counter-narrative. Making money flow better actually enables more effective lending, not less. Definitely food for thought.
It completely reframes the dynamic, yeah.
Okay, shifting gears slightly. With all this growth, going public, are they planning to just acquire a bunch of other companies now? What's the M&A strategy?
They seem pretty clear they're not an M&A roll-up play. They see themselves primarily as a software-powered innovation company, focuses on organic product development, building it themselves.
But not ruling out acquisitions entirely.
No, they're open to small acquisitions, but specifically for great intellectual property or technology and great people that can accelerate their own product roadmap. They mentioned recent small deals that helped with ARC and the yield token stuff, so very targeted strategic buys, not empire building through M&A.
Got it. Okay, last area looking globally, USDC is US dollar. What about other currencies? And global competition.
Yeah, they're definitely thinking beyond the dollar. They're very optimistic that virtually every major country will eventually have sensible stablecoin regulation.
So they want to issue stablecoins in other currencies?
They want to be multi-stablecoin. They already have EURC, the Euro stablecoin. And they envision supporting other local partner stablecoins on ARC and their CPN network.
Interesting. So a network of regulated stablecoins.
Exactly. The long-term vision is on-chain money making cross-border payments way more efficient. Maybe even with atomically swappable PVP exchange, peer-to-peer, instant swaps between different currencies right on the blockchain.
That could really disrupt traditional FX markets.
Potentially, yeah. And the CEO even framed this in geopolitical terms, talking about currency competition on the internet versus China versus other markets. He sees stablecoins as a potential technological weapon to compete for the U.S. and its allies.
Wow, okay. So big picture implications there too.
Yeah.
All right, let's try and pull this all together. This deep dive into Circle's Q2 really shows a company hitting its stride, right?
I think so. Strong financial performance, even accounting for those IPO costs, explosive growth in USDC circulation, and crucially, usage.
And then there's the product roadmap. ARC is this potential bedrock for institutional stablecoin finance, CPN aiming to rewire global payments, USYC offering new capital efficiency. It's a really ambitious vision.
And all turbocharged by the Genius Act, providing that regulatory clarity, it seems like a major inflection point. Their outlook might be conservative at 40% CAGR, but the confidence is clearly there.
Yeah, if you zoom out, what we're seeing with Circle isn't just about one company. It feels like part of this bigger shift. The internet fundamentally changing how money works.
Absolutely. It's moving from just information infrastructure to value infrastructure, programmable money, instant settlement globally.
Yeah.
It really could lead to a more efficient, maybe even safer financial system. It's a profound change underway.
Which leads us to our final thought for you, our listener, to chew on. As this collision between the internet and the financial system accelerates, and digital dollars like USDC become more woven into the fabric of finance, what existing financial institutions, or even just everyday transactions, do you think will be most profoundly transformed by this new era of programmable money?